Good morning, it's me, Kenny Polcari, your host of the party. It is Monday, August 2nd. This is everything you need to know, right? To get your day started. What are the markets doing? What are stocks doing? And what do you need to do as an investor, right? So on Friday, we saw that stocks were weaker. They are not weaker this morning, and that's all you need to know as we move on. Listen, it ain't happening in the UK, mate. That's the word directly from one of my contacts in the UK talking about the Delta variant. China reports weaker PMI this morning, and Jack Dorsey Square buys Australia's Afterpay for a 30% premium. Stocks in Asia rally and stocks in Australia enjoying the ride. European stocks are also higher this morning. U.S. futures are surging this morning. Last week, this is the last full week of earnings reports. Expect some 100 plus companies to report this week. ADP and NFP are on the docket for Wednesday and Friday. Sit tight, that's very important. And what are we having for dinner tonight? We're having cavatappi with pea pesto. Look, U.S. stocks were weaker on Friday following the global market slow, right? A spike in the Delta variant, lingering concerns about regulation in China, their clampdown on the internet, their clampdown on technology, as well as concerns over regional political issues, uncertain Fed policy ahead, inflation, mixed earnings, that are beating on all the metrics, right? But they're starting to warn that the next 6 months may not be as strong as the prior 6 months, but we knew that. We've been hearing it, and that was causing a lot of angst for investors on Friday. Portfolio managers did do some window dressing, which is really a common monthly occurrence that takes place at the last day of the month, setting them up for a new month, which begins today. And what are we seeing? Stocks up. By the end of the day on Friday, the Dow was off by 150 points. The S&Ps are off by 24. The NASDAQ gave back 106, and the Russell closed 14 points lower. Procter & Gamble, which gained 2% on Friday, is just the latest blue chip company to report gains across every business unit, but then sounded somber as it warned of coming pressure on forward guidance due to higher costs, think inflation, for raw materials and transportation, causing a slowdown in sales. It's going to put pressure on profit margins, suggesting that maybe higher prices are coming. CEO David Taylor, who is stepping down, by the way, in November, had this to say: commodities and cost pressures have escalated significantly. You have a tough external environment and a pandemic that is raging. Many parts of the world are at the worst that they've ever been. And this is in line with what we've heard other CEOs say, right? Talking about supply chain issues and raw material costs of Church & Dwight's, which is a New York Stock Exchange listed company, CHD, is just another consumer's good maker that manufactures and distributes household and personal care and specialty products. And they're considering a third price increase in 2022 on top of the 2 increases we already got in 2021 on everything they make. And they make OxyClean, Trojan condoms, Arm & Hammer detergent, a variety of shampoos, vitamins, pregnancy tests, and hair removers. The company is still using shortages caused by the Texas freeze as a talking point. I mean, get over it already. The freeze was 6 months ago. Friday's eco data was also a bit stronger than the expectations, and that once again raises the Fed issue, right? What will Jay do with this stronger data? The 10-year Treasury ended the day yielding 1.22%, while the VIX, the fear index, rose by 3% as stocks fell, right? That's that inverse relationship. Oil ended down 22 cents to $73.73, and gold is holding its own at $18.15 after it kissed resistance at $18.32. This morning, U.S. futures are up on the first day of trading in August. And again, suddenly the concerns from Friday are no longer a concern for Monday. Dow futures are up 188, the S&Ps are up 28, the NASDAQ's up 84, the Russell's up 28 points. Asian markets kicked off the week and ended up strongly. The Caixin Market Manufacturing PMI for July coming in at 50.3, well below the expectation of 51.1. While the official China government estimate was 50.4 versus their estimate of 50.9. In Australia, markets were on fire. News that Square, Jack Dorsey's company, is buying Australian firm Afterpay, and that sent the market surging and the stock up 18% in Australian trading. Square's quoted a bit lower this morning on the news, 238.60, 239.40 versus Friday's close at 247, and that makes sense, right? It was an all-stock deal that they paid a 30% premium for Afterpay. Afterpay is in that installment loan business, very much like Affirm, PayPal, Klarna, even MasterCard, Amex, and Google are getting into the space. So it's hot, 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 and it is disrupting the traditional revolving credit industry. At the end of the day, Japan was up 1.8%, Hong Kong up 1%, China up 2.5%, and Australia up nearly 1.4%. European markets are higher across the board on the back of the Asian performance and on more positive earnings, some M&A information, better economic data, car makers and retailers leading the way higher, better earnings from HSBC and Heineken, a takeover bid for Meggitt PLC, and word that Eurozone factories are hiring new workers at a record pace is causing all kinds of excitement. I reached out to a friend of mine in the UK and asked him about this Delta variant and if it is as out of control as the papers here suggest. His response, not at all, mate. While it's spreading, 80% of the UK citizens are vaccinated, so the effects are mild at best and deaths are plummeting. The sense is we're just going to have to learn to live with it like we're going to have, like it's like the annual flu, right? And the idea of another lockdown ain't happening at all. At 6 a.m., all markets are up across the region between 1 to 1.5%. This week here at home, we're going to get earnings from the likes of Lyft, Amgen, Uber, CVS, General Motors, Roku, Square. Of the 60% of S&P companies that have reported so far, 88% of them have beaten on all metrics, earnings per share, top and bottom lines, and everything in between. That's about a 15% premium. It's above the norm, 15% above the norm. But that's what it is, and we knew it was going to happen, right? We've been talking about it for weeks and months. This week also brings us a slew of economic data that includes the ADP employment report on Wednesday and the non-farm payroll report on Friday. But in between, we're going to get manufacturing PMIs, services PMIs, construction spending, factory orders, and all the other usual suspects. A lot of attention is going to be paid to both ADP and the NFP reports for obvious reasons. And it's going to detail job growth for the month of July, and that will be a key stat that the Fed will use to further their conversation about whether to taper or not. Remember, the Jackson Hole Fed boondoggle is Thursday through Saturday, August 26th to the 28th. Expect to hear lots of speculation all month long about what we're going to expect. And expect to hear from a variety of Fed members who are going to opine on what's next for the Fed, with both sides coming to the center court to float a different balloon. Because remember what I said, that's how they take the temperature of global investors. They toss something out there, they wait for the reaction, and they see which side has the more mild reaction, right? And guess what oil's doing today? Yup, you got it. It's under a bit of pressure because the China macro data was weak. And so the paparazzi are telling you that because the macro data in China is weak, that must mean that demand is going to fall. And oh my God, oil price is going to decline. Stop already. Stop the lunacy. Demand is alive and well. Unless, of course, OPEC Plus and the Americans begin to flood the market with so much oil that there's no place to store it. And then prices will collapse. Guess what? Not happening, mate. Trendline support for oil is at $70.60. And while I do not believe it will go there, much depends on the conversation surrounding possible new lockdowns across the globe. And to quote my British friend again, not happening here, mate. The 10-year Treasury yield is up small this morning, right? But it's early. The VIX is down, and that makes sense because stock futures are up, right? So it's that inverse relationship. Bitcoin continues to hover just around 40,000. Ethereum hovers around 2,600. The $1 trillion bipartisan infrastructure bill is making its way through the Senate, is expected to be passed by Thursday, but House Speaker Pelosi refuses to bring it to the House floor unless she gets the additional $3.5 trillion reconciliation bill that she wants first. And don't forget, the House is already now on a 6-week summer vacation, so no one's even home right now. She'd have to call them all back in. Trust me, they don't want to do that. Remember, valuations remain rich. Monetary policy cannot go on unchecked forever. The 10-year and the 30-year rates are expected to inch higher as we move into the end of the year. right? We are beginning to see talk of mask mandates again for everybody, vaccinated or not, and that's causing tensions right along the political lines, breaking up friendships and families, even marriages. In addition, we're about to enter the danger zone, as I said, which is the seasonally weak time of year that happens every August to October. So expect volatility increase as the VIX goes down, stocks go up, and until the relationship reverses and the VIX goes up and stocks go down. Right? It's not rocket science. It's just kind of the inverse relationship. It is what it is. And let me remind you, there's no reason to jump ship. Don't panic. Look for the opportunities that are about to be created. Investing is dynamic. It is not static, right? So it's kind of constantly on the move, which is why you can't fall asleep. The S&P closed on Friday at 43.95. And if the strength holds this morning, expect us to test last week's highs of 44.25 early on. But remember, the tune can change on a dime. So be ready to go shopping when it's time to go. In any event, it is... It's the beginning of a new month, and I'm not surprised to see the weakness at the end of last month as we now go into this strong month, right? But the virus variant will remain a risk factor for the markets, especially as we come into the fall, which tends to be, like I said, weak on its own, right? I'm still thinking we get a 7 to 10% correction over the next 2 months. In any event, stick to the plan. Remember, investing is dynamic. Keep some cash ready to deploy, but don't be quick on the trigger just yet. Now, you know what you can do? You can text the word invest to 21,000 to get my digital business card. Download it right to your phone. It's got all my information on it, my email, my cell phone, my Twitter handle, all that stuff. Feel free to reach out, give me a call, send me a text, send me an email. I'm always happy to talk about the markets. I'm always happy to talk about a plan. I'm always happy to talk about concerns. And, you can always find me on Twitter. My Twitter handle is just my name, @Kenny Polcari. You can also find me... I'm going to post my appearance from my Fox appearance on Friday with Stu Varney at 9 o'clock. It'll also be on Twitter, so you can catch that if you happen to miss it on Friday. So what are we having for dinner tonight? This is such a great, easy dish. It's cavatappi with a pea pesto. Now look, here's a little bit of history, right? The pesto sauce originated in Genoa, which is in the Liguria region of northern Italy. Liguria borders France, Piedmonte, Emilia-Romagna, and Tuscany. And it sits right on the coast of the Ligurian Sea. Portofino, which you probably know, is just up the road from Genoa, and it's a popular summer destination for Europe's rich and famous. The hills lying immediately beyond the coast, coupled with the sea, account for this mild climate year-round. Average winter temperatures are like 45 to 50 degrees, and summer temperatures tend to be in the 70s, right? This makes for a very temperate place year-round, and as such is quite popular not only for Italians, but for Europeans. Today's recipe makes use of the mortar and pestle. The verb pestare means to pound or crush. Pesto is the past participle of the verb. The reference to pounding is because of the way they used to make it in a mortar and pestle. It's a tool that's used to crush and grind certain ingredients, herbs, etc. Today we're going to use a food processor because it is 2021. Pesto is usually made with garlic, basil, pine nuts, Parmigiano cheese, olive oil, right? In other recipes, I substitute the basil for arugula or asparagus or broccoli, and I make a pesto out of those ingredients. It's also good. But today we're going to use peas, and we're going to make a pea pesto, which is also very good. And so for this, you need a bag of frozen peas. You need the Parmigiano cheese, you need garlic cloves, you need a splash of lemon juice, which is different. You need a bit of chopped basil, just a little bit. You need salt and pepper, but not too much salt because the cheese is salty, and then you need the olive oil, right? You're going to first bring a pot of salted water to a rolling boil and then just leave it there until you're ready to boil the pasta. Next, in a smaller saucepan, put some water in, bring that to a boil, add the frozen peas. Cook until the water reboils plus 1 minute. That's it. Then strain them. Let them cool for a minute, and then blend all those ingredients in the food processor, right? The peas, the garlic, the oil, the cheese, the